Well, good morning, and look who's back. Yes, it's me, Kenny Polcari, your host of the party. And today is Tuesday, November 29th, 2022. And look at this day behind me. The sky is blue, the sun is out. Certainly a much better day than it was yesterday. So let's hope it's going to be that way in the markets as well. So what is it that we need to do, right? So Joey is calling on Congress to avert a devastating strike by the rail workers unions, right? We've heard all that. Now it's coming home to roost. China clamping down even harder on the big cities as police rounding up phones to track where people were at the time of these protests were going on. And that's going to be a whole nother issue. Oil falls and then it rallies after OPEC Plus considers what? Oh, yes, production cuts to help maintain the price of oil. And consumers spent $11.2 billion yesterday, a new record for Cyber Monday spending. And what do we have for dinner tonight? Well, we're going to have the shells with sweet sausage, pancetta, and cannelloni beans. It's a great winter dish. So much for the Thanksgiving rally, right? Stocks plunged and ended the day lower on Monday. The Dow losing 500 points, or 1.5%. The S&P down 62, 1.5%. The Nasdaq fell by 175 points, 1.6%. The Russell lost 40, and the transports gave back 300 points. Both measures down more than 2%. That looming rail strike, just one of the issues that had investors concerned. By now you know that the deal reached prior to the election was nothing but a sham, right? Joey telling us that it was all done while the union said they didn't support it, but they would continue to try to hammer out a deal, right? It was a way for the current administration to look as if they had succeeded in averting this potentially crippling strike just days ahead of the midterm elections. Well, guess what? Now we have a potential strike just days after the midterm elections, right? That threatens to upend the economy, right? Think about $2 billion a day if they strike. Recall that the railroads move about 40% of U.S. long-distance cargo, including feedstock, lumber, construction materials, water purification supplies, right? Think chlorine, coal, think energy. So even a short strike could lead to an economic calamity, something that certainly the Biden administration does not want to see. So yesterday, Joey reached out to Congress, calling on them to pass legislation and impose the contract that four unions have rejected, right? Biden telling the press and telling the unions, look, as a proud pro-union president, I'm reluctant to override the ratification procedures and the views of those who voted against the agreement. But in this case, where the economic impact of a shutdown would hurt millions of other working people and families, I believe Congress must use its powers to adopt this deal. So here's Joey, right, pushing back, and he's got to push back hard. Now, Pelosi, not wasting a minute, said that the House would vote on this request this week because it was that important. Understanding that there is reluctance on both sides of the aisle to step in, right? The Democrats don't want to be seen as telling labor unions what to do, while Republicans oppose government intervention in private contractual negotiations. And so the clock ticks. Which way are we going to go? What is ultimately going to happen? Then we have all the unrest in China over citizens wondering why the rest of the world has returned to normal as they watch the Qatar FIFA World Cup events, right? And they're being locked into their houses, and strict COVID policies continue to fail in China. The protests, which took on a new life over the weekend, subsided a bit when Gigi launched a heavily armored police forces across the major cities that were seeing the most pushback. Think Beijing and Shanghai, right? Scenes of police beating protesters were all over Twitter and some of the major news stations, right? Police are even collecting phones to see where people were at the time that some of these events took place. So as this spins out of control, Gigi finds himself between a rock and a hard place, but chose to tighten controls, right? Dispatching phalanxes of police to prevent more protests. And don't kid yourself. All they have to do is check those phones, like they said, and they are, to see where people were at any moment in time, because that is some of the data that China collects every single day, and anyone found to be at or near those protests are sure to get a visit, a knock on the door by the government. The fear is that the crackdown will most certainly create more economic problems for China and then the world, right? Think supply chain and demand for energy issues, right? In any event, it is what it is. And while politics will create all kinds of drama, it will not price stocks in the long term, right? I keep reiterating that. It does create chaos in the short term, but provides opportunity in the long term. Remember, the world is partly responsible for what we're seeing now, right? We allowed this to happen by allowing China to become the manufacturing hub of the world, right? Watch what happens when Beijing takes Taipei in 2023. That won't be a political issue. That will become a global security issue. In fact, it already is. That's a conversation for 2023. And then we heard from not one, but three Fed heads, right? St. Louis' Jimmy Bullard, who said that the markets are underestimating the chances of higher rates. Remember, he's the one who floated the 5 to 7% terminal rate. Then you had New York's Johnny Williams reminding us that more work needs to be done to curb inflation and that the fight could go into 2024. And then Vice Chair Lael Brainerd chimed in saying that the string of supply shocks is keeping inflation risks elevated. All very hawkish statements. And by the way, nothing is really new here, right? If you've been listening, they've been saying this all along. But on a day when the tone is negative, then the more hawkish commentary plays right into the weakness in the markets, and that's kind of what you saw yesterday, right? Because there was nothing new in anything that they said. Then a team of Morgan Stanley analysts who are calling for S&P 3200 before this is over reminded us that if you think rate hikes are an issue, you better start focusing on quantitative tightening, right? QT, which is contra to quantitative easing, QE. Remember, QE and zero interest rates were the reasons that stocks and a host of other assets went decisively higher over the last 10 years. And so it only makes sense that quantitative tightening and rising interest rates are going to be the reason that stocks and other assets reprice or adjust or go lower, right? Think of a nice word. Think QE adds money to the system while QT takes it away, and that's going to be a problem at some point. The team is calling for the S&P to drop by 8% from current levels to end the year at 3650-ish. Now, to be clear, there are many different opinions on this matter, right? Everyone's going to talk, every bank is going to talk up their own book depending on what their outlook is. Even Goldie slashed their year-end target going from S&P 4300 to S&P 3600. So investors have a lot to consider, right? Do they put more money to work now, or do they just let the cash pile up and wait? And speaking of cash, guess what? Early results are suggesting that Cyber Monday just may have been the biggest shopping day ever. Early reports show that we spent $11.2 billion yesterday, a rise of 5.2% over last year. So is it that demand is strong, or is it that the markdowns are so significant that consumers just can't leave it on the shelf? Or is it that higher prices are creating more money? Either way, it doesn't matter. The fact is that we spent $11.2 billion in one day. And add that to the record spending on Black Friday, and it's hard to see how there are any concerns at all. Dana Telsey of the Telsey Advisory Group telling us that consumers are very civilized and that retailers have to offer value, and is once again picking the big discounters as this season's winners. Names that I noted yesterday, right? Target, TJ Maxx, Walmart, BJ Wholesale Club, Kohl's, Ross Stores, and Costco, all names that should benefit in this environment. And as you would expect, energy got absolutely walloped yesterday, falling to a low of 73.60 before rallying back to end the day at 76.50, right? For all the reasons I cited above. This morning, oil's up $1.80 or 2.5% at 79.20. And do you care to guess why? Yeah, demand is just one component. Think hard. I told you it was going to happen last week. OPEC Plus is said to consider more production cuts when they meet this weekend to offset the recent decline in prices. And since Joey announced that Chevron can pump more oil in Venezuela, yes, Venezuela, not the U.S., they can go to Venezuela and pump all they want, that's only going to add to the supply side of the equation, causing the Saudis to reconsider appropriate levels of production. Recall, $80 is the floor that the Saudis want to maintain. So we're right there again. And so they're going to consider cuts. It's going to just give oil upward pressure. This morning we see U.S. futures on the rise. Again, not a surprise after the drubbing we took yesterday. And while they were up at 5:30 this morning, they are off of their best levels overnight. Currently, with the Dow futures are up 40, the S&Ps are up 12, the Nasdaq up 60, the Russell's up 9. Relative calm in China being cited as just one of those reasons. Others include the fact that investors expect this week's PCE to be weaker and next month's CPI and PPI to show modest improvement as well, which plays right into the Fed's fight against inflation. Consumers spending money like a drunken sailor over the weekend is also going to add to that that feel-good move, right? We're going to hear all about that today as analysts try to pick apart and decipher where we spent all that money on Cyber Monday. Players on the stage have now shifted, right? On center stage today, it's going to be all about the retailers. Stage left is still going to have those range of analysts telling us what to expect from this week's economic data and what yesterday's Fed comments mean to the markets, while on stage right, we'll focus on that China issue, which now seems to be subsiding. Yesterday it was center stage, today it's on the right. Stocks in Asia, China and Hong Kong specifically, rallied hard on the back of that news. Hong Kong up 5.25%, China up 3%, Taiwan was up 1%, Japan down 0.5%, Australia is up 0.3%, and South Korea rallied by 1 full percentage point. The dollar index tested and held support at 105.40 and is now trading at 106.25. Gold's up $14 an ounce at 17.70 an ounce, right? Remaining right in that 1700, 1800 trading range. Stocks in Europe are mixed for all of the same reasons. The UK up 0.7%, while Italy's lower by 0.1%. Investors, they're watching the unfolding developments across China, as well as digesting the recent ECB comments by Christine Lagarde yesterday, right, on what the ECB sees and thinks, and they maintain a course the same way the Fed is maintaining a course. The S&P closed last night at 3963, down 62 points. Now, while it was a dramatic day, nothing really changed, right? We remain solidly in the 3790, 4070 broad trading range. 3920 is the next level to watch now. That's the next short-term support trend line. You want to see it test that level and you want to see it hold. Now, if Morgan and Goldman are correct, at some point we're going to slice right through that like a hot knife through butter on the way to S&P 3600. But I'm not sure that that's happening today. Ecodata today is all about housing prices across a 20-city sample, and month over month is expected to show a decline of 1.2%, while year over year is expected to show a 10% increase. Neither data point is going to be a directional driver for investors. Expectations are for weaker housing prices going forward, so the year-to-year data point is actually useless in my opinion. Can you really sell your house up 10% from where it was last year? No, you can't. And while they tell you that it's worth 10% more than it was last year, you go try to sell it for that and tell me then what happens, right? Remember, mortgage rates are up by more than 133% from January till now, right? 3% to 7.25%. And Lonnie Musk is about to launch a new fight, this one with Apple and Timmy Cook, after Apple threatens to remove Twitter from the App Store. Musk asking on Twitter if Apple hated free speech. Some analysts saying this is a risky bet, pointing out that Musk represents risk and Apple isn't going to play in that sandbox. But it's more complicated than just that, right? I mean, think about this. If Apple cuts ties with Twitter, then some 1.5 billion users are going to be affected, right? That's bad for Twitter. But Lonnie, he's very good at rallying his fans, and his disdain for the high App Store fees, which are shared by developers and regulators and lawmakers, right? And that's bad for Apple. So this story's only beginning, right? So expect to hear so much more about this in the days ahead as we see, Timmy versus Lonnie in the news. As discussed, I think investors are going to continue to make the markets churn over the next 5 weeks, right into year end. I suspect we're going to remain in that 3920, 4030 trading range, support and resistance trend lines, right? If the PCE, CPI, and PPI suggest that inflation is falling faster than expected, then watch as the investors and traders now go take stocks higher with a test of the August highs in clear view. If the data suggests anything different, then watch as stocks continue to struggle and push lower. As the inflation is not responding to these increased rates, right? So you want to stick to the plan. You want to overweight the stuff that people need. I've been saying it for months. It sounds like a broken record, but it has worked. Consumer staples, energy, utilities, healthcare, right? Look for those large cap multinationals that have strong balance sheets and pay good dividends. No reason to suffer from FOMO, right? That fear of missing out. If you've paid attention and you remain invested, it is those that choose to try and pick the tops and the bottoms that feel the pressure of FOMO, right? The fear of missing out. Okay, so what do we have for dinner tonight? Well, this is a great winter dish, right? Because it's hearty and it fills your belly, and you're going to use medium shells with sweet sausage, pancetta, and cannelloni beans. Oh my God, this is so delicious. And make sure you got enough fresh grated Parmigiana cheese, right? And like I said, it is a great dish for a cold winter's night, right? You light the fire and you want to curl up on the couch. after you eat it, or maybe even while you're eating it, you're watching a good movie, right? So for this, you need 2 cans of cannelloni beans. You need garlic. You need thick cut pancetta that you're going to cut into small little cubes, right? You want sweet Italian sausage out of the casing. You want 1 large sliced white onion, yellow onion. You need olive oil, vegetable broth. You can use chicken broth if you want. Either is fine. You want water, salt, and pepper. You want finely chopped parsley, fresh grated Parmesan cheese, and a box of medium shells. Now, in the saucepan over medium-high heat, you're going to add some olive oil and then add the sliced garlic. Saute it for 3 or 4 minutes. Now you're going to add the sliced onions and saute them until they're soft and translucent. You don't want them to burn. You know the deal, 8 to 10 minutes. When it's ready, you're going to add the pancetta and the sausage and allow it to brown up nicely, using only your wooden spoon to break up the sausage as it cooks. Right? Get it all nice and brown. Let the pancetta meld with it. It'll be delicious. Now you're going to add 2 cans of the cannelloni beans, juice and all. Just open the can and add the whole thing. You're going to mix it, allowing the beans to marry into the other ingredients. Now you're going to add the broth and the water at a 2-to-1 ratio, right? 2 cups of broth, 1 cup of water, or 4 cups of broth, 2 cups of water, right? You see that pattern? You want to let this simmer on the stove, bring it up to a boil, then turn it down, let it simmer on the stove for 15 minutes, stirring it every once in a while. Now bring it to a boil. If you have to add more water, go right ahead, because you want to add now the pasta, and the pasta grows as it starts to cook. It sucks up some of the liquid, right? Now you want to toss in the shells. Now don't use the whole box here. The pasta grows and sucks up the broth. So again, maybe use half or a quarter of the box, depending on how much you're making, and cook it until it's al dente, right? Maybe 8 minutes or so. Adjust the taste and adjust, and serve it in warm bowls. Adorn it with the parsley, and maybe even a drizzle of fine olive oil on the top, but just a drizzle. Have plenty of fresh grated Parmesan cheese on the table for your guests, and on the side, you can serve this with toasted garlic bread, right? Pane di casa, which is the perfect Italian-style bread, and it's the perfect texture, and it's the perfect side dish for this main dish. In any event, look at this. The sun is coming out. It's going to be a gorgeous 80 degrees here in South Florida today. And I might just be going to the beach later on. In any event, until tomorrow, take good care.